Welcome to Credit Monster, where high limits are achievable and bad credit is beatable. It's your boy again, legendary Daquan, back in here with another banger. Listen, we're going to talk about the top 5 credit cards for rebuilding credit from bad credit. I got an awesome list for you guys today, so let's not even waste any time and get to it. Okay, y'all, so before I really get into the credit cards, I just want to give y'all some house rules when it comes to dealing with credit cards. Now, if you're rebuilding credit especially, you do not want to keep a balance on these cards. You want to use them and then pay them off in full each and every month. This will count as an on-time payment on your credit report. Even if you don't use the credit card within that month and you don't use it and you don't have a payment, and then the next month come, they will report that you have an on-time payment even though you didn't owe them any money. So just by holding the credit card actually is a positive action on your credit report. The only negative action you could take when it comes to credit cards is either missing a payment that you owe or overusing the credit card without paying it off in full. So if you use more than 30% of your available balance between all your credit cards, that would negatively impact your credit score. Generally, if you're generally speaking, you do not want to use more than 2%. You do not want to hold more than 2% of your available balance on any given month on your credit cards. You want to be paying these credit cards off in full. The reason being is because the way the bank, I'm gonna tell y'all how the bank looks at this. They will look at your credit report, and they was and this is why they create the credit score, because it's tailored to banking thinking. They will look at your credit report and say, this person has available credit up to $1,000. Their credit limit is $1,000, but they spent $800, which is 80%. They spent $800 this month and didn't have the money to pay it off. This person must be in a tight situation, or they might be irresponsible with money. And this is why you want to keep your balances low month after month. If you do run up your credit cards, because you might want to give rewards, you might want to get that cash back, you might want to get them flight miles, you want to pay them off significantly, if not in full, each and every month. You don't want to spend money you don't have, basically, which is swiping that credit card and you not having no way to pay it. Do not make that mistake, especially if you're rebuilding credit. Now let's get to the credit cards. So the first choice I say is Grain. Grain is a fintech company, meaning an online bank that actually does no credit check. So that's a plus. They do no credit check. What they do is they'll analyze your bank account activity to see what you qualify for. So you could qualify for up to $1,000 with Grain, no credit check, no security deposit. So this is a really good product. The only downsides are that it's only available to Apple products at this moment. They don't have an Android app. You have to go through the app to apply for Grain. So they don't have an app for Android as of right now, but you can get on a waiting list. If you go on their website and put your email in, you can get on a waiting list. So, but with people with Apple products, you're in luck, because you can join Grain right away and you could go ahead and see what they'll qualify you for. Now, the other downside is, because I use it personally, I've been using it for about 6 months now. It does have a lot of technical difficulties with their app. They're always working on their app. They just sent me an email not too long ago. They raised their interest rate a little bit. It's not even that much interest also. So if you do hold a balance, it's not going to be a big giant monthly payment. But like I said, I don't recommend that. They actually they raise their interest a little bit so they could pay their employees a little bit more so they can have better support and better, they could solve their technical difficulties a little bit faster. Another thing with Grain is, you know, with all these credit cards, I recommend that you have auto pay, but with Grain, your auto pay may get knocked off every 30 to 60, like every 60 days or so. Like you would have to reconnect your bank account. So don't just like not think about it. Like don't, like if you take a loan, basically withdraw some of your line of credit from them and you on auto pay, it may work like 1 or 2 months, but then you might need to reconnect. So always be checking that app to make sure your bank account is connected, because you don't want to get a late payment by an accident. Now they probably will work with you based on the fact that it's not your fault, but you don't want to risk that. You just want to make sure everything works. Everything that's in your control, you control, and everything works smoothly in your favor. The next recommendation is the US Bank Secure Credit Card. Now, US Bank is a national bank. They have branches in certain states, but almost anybody could get this card no matter what state you are in. Now, this secure credit card does require a security deposit. They do a credit check, but they are very liberal about who they extend credit to, especially with their secure credit cards. So, and another great thing about their secure credit card is their max limit is $5,000. So if you have, you know, a nice savings but bad credit, you could instantly boost your credit score tremendously by putting that $5,000, maxing it out at that $5,000 security deposit. Now, you asking me, why would you want to put that much money in a secure credit card? I'm going to tell you why. You want to transition the way you pay for things on a credit card instead of a debit card. A credit card gives you added security. If you use your debit card and it gets compromised, it's going to take a while for the bank to retrieve your money, if it even does retrieve your money. With a credit card, if something happens, you will get your money back refunded right away, and you will still have the money in your bank account to back you up until you get the new credit card. So it's very great to use a credit card because of the security benefits, and also for the other benefits like the rewards that certain credit cards give. Now, the US Bank Secure Card does not have any rewards. And also a good thing about it is it doesn't have an annual fee, but after about 12 months, they will automatically check your credit score again to see if you're eligible for one of their unsecured cards, and they'll just do an account transfer into one of their rewards cards, like maybe cash back or maybe flight miles, whatever you like. And that's another thing I want to give y'all the sauce on this. And not a lot of people is talking about this, and a lot of people get frustrated and upset about this. The fact that it does say it's going to unsecure in 12 months, but that is based on eligibility. If you're at the same credit score or even at a worse credit score and you got the card and you've been using it, maybe you've been paying on time, maybe you've been being responsible with your credit card, but you got a new collections, you got a repossession, all this bad stuff happened and your credit score went down, or maybe it just stayed the same, you will not qualify for that upgrade. You know, after 12 months is not a guarantee. You need to qualify. You need to be increasing your credit score with these secure credit cards, or while you have these secure credit cards. That means this is the building process, but then you have to do the repair process if that's what you need to do. Now, if you have no credit, then you just need to build. If you have bad credit because you have bad stuff on your credit report, then you need to do the building and you need to do the repairing. So that's just a caveat. The next recommendation will be the Discover It card. Now, if you Google this card, everybody's raving about this credit card. It is a great product. The only thing is, if you have super bad credit, like super duper bad credit, they will probably decline you. you have to build more credibility to be eligible for the secure card. So I wouldn't even apply for it right away. I will go ahead and get pre-qualified. They do have an option where you could get pre-approved. I mean, you want to go get pre-approved and see if you have a great chance of getting this card. Don't just go apply for it. I don't care what Credit Karma's talking about. See if you could get pre-approved first, and if they do pre-approve you, then go ahead with the application, because they do a hard pull on your credit report, and you don't want to go ahead with the application and you had no chance of getting approved. That's just crazy, right? That's a hit on your credit score for no reason. So this card does require a security deposit. You can put up to $2,500 on this card, and after 8 months, that's when they go ahead and see if you qualify for one of their unsecured cards, and you do get your security deposit back if you do qualify. So again, you want to be working on repairing your credit while you're building your credit, because once you get all those negative derogatories off and you've been building your credit maybe a year, maybe a year and a half, you're just going to have very good credit at that point, right? So just keep that in mind. The next recommendation is pretty controversial. It's the Credit One card. Yes, Credit One, not Capital One, but Credit One. And the reason why I say Credit One is because, I mean, for the most part, you probably had a Capital One card if you have bad credit. Like, that's normally people's first credit card. But that's the proper first credit card if you ask me. If you had like a first primary card, that's your first card, that's kind of ugly. But Credit One is like an offshoot of Capital One. It's kind of their step cousin. A lot of people don't like Credit One because, you know, the Capital One similarities, and Credit One is significantly smaller than Capital One. But if you use your credit cards properly, you shouldn't have any issues with Credit One. And one of my favorite things about Credit One is that they're a partner with American Express. And if you know anything about credit card and the credit cards industry, American Express is one of the top of the line credit cards that you want to really get it with. Now, they have a partnership with American Express. They have a credit card is unsecured for people with bad credit or average credit. They say it's for average credit. And they have the American Express brand on it. So it's on the American Express network. So you could actually get the benefits of an American Express card as far as liability protection, fraud protection, those great benefits with American Express, and even certain other perks that the other cards have, like getting like concert tickets. You can be in the first to get concert tickets, all that great stuff. And you get cash back with this card. Now, this does have an annual fee. They have two levels to it. They have one where it's like $39 annual fee, and then they have one that's like $95 annual fee. If you ask me personally, I'd rather do the $39 annual fee. And the thing is, you could get that annual fee paid for if you actually use this card responsibly. And remember what I said earlier, you want to be transitioning how you pay for things. If you use this card for your bills, or like maybe most of your bills, but not maxing it out, do not max it out, just maybe use most of it and then pay it off right away on that next paycheck. And that shows that you're responsible with your credit. And when your credit score increase because you've been fixing your credit too, and you building your credit, they're just going to simply increase your line of credit because they like, this is a great customer, they've been using it, we're making money. Because when you use the card, they make money. Not only that you know pay interest and stuff, you don't even want to pay interest because you're not holding the balance, but when you use the credit card, that looks good on them, so they could get, you know, bigger funding and stuff in the banking finance world. But when you use it, it looks good, so that makes you look like a good customer. And also you get that cash back, which also pays for that annual fee and then some if you're using the credit card properly, and you just pay it off in full each and every month. And that will be conducive to them making a decision to increase your credit limits, and that will actually raise your credit score as well. The last but not least, the fifth recommendation is the lender secure credit card. Now this is another controversial bank right here. This is another fintech bank that actually wants to provide people with opportunities to build their credit. Now this is kind of like two accounts in one. If you don't have a self-lender, you have to start off with their self-lender loan. So it's like a savings account, or they call it a forced savings, because you're forced to pay this monthly payment to a savings account, and they'll just hold the money. It does get interest until your agreement, maybe it's 12 months, maybe it's 24 months. Until that's over, then they give you a check with the money and the interest that you've been saving. Also, they'll report all those payments to the credit bureaus. So it's like you're paying off a loan, which builds your credit score. Now, this actually adds to your credit bits, because this is an installment versus the revolving. The installment payments is like car notes, mortgages. You need some type of installment payments. And you need your revolving payments, which is the credit cards, which is, you could use it and pay it off each and every month. You need both of those to add to your credit score. That is 10% of your FICO. That's another conversation. I have another video about that. I'm going to put a link to it up here, where I kind of explain the difference between revolving and installment and how to build the credit mix. But anyway, let's go ahead with the self-lender. You do have to sign up for their self-lender loan. If you ask me, I recommend that you do the highest plan. I think it's $150 a month. Now, the reason why I say this is because when you go for their secure credit card, you're not eligible for the secure credit card until you pay the loan for 3 months. Now, based on what you've been contributing into that loan is what you could put on that credit card. So if you contribute to, let's say hypothetically, you contribute $2,000 in 3 months, you could put, $1,700 on that credit card, which will boost your credit score something crazy, right? Because now you got a $1,700 credit card or a $2,000 credit card. But you can't do that. That was just a hypothetical. The max you could do is $150. So after 3 months, you'd be looking at about $450, and you could put maybe $400, because you do got to keep a little bit of savings inside the savings part. Even if you do the $50 a month, that's, you're going to end up with $150 after the 3 months. You could transfer let's say $100. They only let you do it in $25 increments. $125 into the credit card. So the reason why this is great is because you could utilize the money that you've been saving. Why is that, Daquan? Because you're transferring the savings funds onto the credit card, and then you could use the credit card, which is essentially the same money, because it's a secure credit card. Now, another good thing about self-lender, they don't promote this too much, is after 6 months, they will see if you qualify for your security deposit back from the credit card, and now you have an unsecured credit card. So now, that's great. That's great. That's gonna boost your score. That's actually what you want. Money in your pocket, cash money, and you have the credit. That's how you want to work the system. Okay, y'all. So that's the top 5 credit cards that I recommend in 2021. That's gonna help you rebuild your credit. Let me know if you have any experiences with these cards. Some people may have bad experience because they wasn't paying attention to what you're doing. You have to really be diligent and be aware of what's going on with the credit cards. Yes, read the terms and conditions. Read the annual rates and stuff like that. Read the contract. Like, I know a lot of people don't read the contract. Skim the contract and see the fees, see the fee schedule, see what they're saying in these things. And also, I will recommend that you don't hold the balance. Like, a lot of people hold the balance and then they lose their job or something happens, and then bad things can happen after that. So don't hold the balance. Have your thing on auto pay. And if you do all those things, you should be fine for the most part. But let me know in the comments below. I'm going to post another video right here that you could check out. And I give you a lot more credit card recommendations. And in the description below, I have a playlist of the reviews that I do for individual credit cards. So go ahead and like, comment, share. and I catch y'all on the next one. Peace.